Hello everybody, welcome to the February, Thursday, and Friday, 6th through 7th price review. So getting started here, looking at the NASDAQ, the S&P, and the Dow on the 4-hour time frame. As you guys know, majority of this entire week, we have been bullish, and price has delivered as we expected, and the catalyst behind that was the monthly SMT that was outlined on Sunday. Now, Wednesday night, I said we will likely continue higher unless given a reason to fall back within the range. So if price were to trade a little bit higher and then form an opposing SMT, that could cause price to return back within the range, which is what we got on Friday. So now still looking at the 4-hour time frame, as you guys can see, on Friday, the NASDAQ took this high right here and also had its candles close above this close right here. Now, what is significant about this high and this close right here? This is the previous highest close on the 4-hour time frame, which is correlated to the monthly cycle, and this is the highest high of the previous monthly quarter. So there was an opposing monthly bearish SMT that formed, and it formed between the wicks and the bodies. And the reason why the NASDAQ was the one that ran up the highest and transitioned into being the strongest asset is, as you guys can see right here, it created the failure swing on that initial SMT. So price will just move from SMT to SMT. So this is a clear-cut example of that because I've said that many times in the past. And as you guys can see right here, this is what I'm referring to. So as you guys know, with non-farm payroll Friday, at the beginning of this week, I stated we could see Thursday or Friday being the high or low of the week. And a way of knowing is how far away price expanded from that weekly opening price. So as you guys can see right here, this is that weekly opening price. And no, I'm not referring to the true week open. I'm talking to the real Sunday opening price. If you take that, draw that across, as you can see, price was trading way above it, which is why price returned, or another caveat as to why price returned back into the range on all of the assets. As you can see on the Dow, it returned so deep into the weekly opening price that it actually closed below it. So this is that real-time example right here. You're seeing the things that I'm teaching you, you're seeing them play out week after week. And this is why I don't really answer too many questions about things that happened way back in the past, to where it's very cherry-picked examples because some of you asked that. And I give everybody the exact same answer. I say the examples will come from you seeing it happen over and over again and being outlined before it even happens. But how could you have known to look for that return into the weekly range and not continuation higher, even if you didn't take into account this weekly opening price? Is, as you guys can see right here, we have a daily TPD. So this candle right here is a daily TPD. As you can see right here, this would be candle 1, the close of this candle, and the open of this candle. The open of this candle is higher than the close of this candle. The open of this candle is higher than the close of this candle, but on the Dow, the open of this candle is lower than the close of this candle. And that is why it was the strongest for downside movement and came very close to returning to that weekly opening price. So whenever we get a daily TPD, the best case scenario is to have a weekly SMT form confirming that daily TPD. Now, best case scenario is that there is a monthly SMT governing it, and then that daily TPD forms. But if you have the narrative and the logic, which in this example was Friday is known for returning into the weekly range if it is expanded far away from that weekly opening price. Did we have that? Yes. So we didn't per se need this monthly SMT, it was just an extra added confluence. And now looking at the hourly time frame, as you guys can see, after we had that daily TPD, we had a weekly sequential SMT form between Thursday and Friday, Dow being the weakest of all of them, made the failure swing, while the S&P and the NASDAQ took this high right here, which was Thursday's high. And since the NASDAQ was the strongest, it ran all the way up to that previous weekly high, which would be the previous monthly cycle quarter high. So now we're looking at the 15-minute time frame with just the NASDAQ and the S&P, because if you had traded today, then you would have already seen that weekly bearish SMT form. But we have non-farm payroll. This is the candle right here. As you can see, non-farm payroll took out both sides of the marketplace. Now, this is one characteristic that non-farm payroll has. It tends to have a two-stage delivery, and if narrative is correct, then this is likely what you will see is non-farm payroll takes both sides of the marketplace. So if you were a short seller right here, then you got wrecked. If you were a buyer down here, then you got wrecked. And after the market will take both sides, then it runs. If it's bearish, like in this example right here, it'll run those data highs and then make that real move. If it's bullish, then it'll run below those data lows and then make the real move. So since we had that narrative of we were way expanded above the weekly opening price, as well as having that weekly bearish SMT, as you can see, the NASDAQ ran above the non-farm payroll high, and at the same time, it simultaneously made that bearish monthly sequential SMT. Now, if we look a little bit further, you guys can see there was a 15-minute TPD that formed after price had taken the data highs and formed that bearish monthly SMT. So here's the TPD right here. And again, we have the S&P on the right, the NASDAQ on the left. This would be candle 3. So this open is higher than this close. This open is lower than this close. So there's a cracking correlation right there. And as you can see right there, that is exactly what caused price to drop down. And then it traded higher into this fair value gap and then continued lower. And there was also a breaker in confluence with it as well. So both assets offered that fair value gap and breaker signature, which is the first model I ever taught you guys. So we ran higher, formed a TPD, broke down, formed a fair value gap. This would be considered the breaker because we made a low, higher high, lower low, traded back within that range, and then continuation lower. But within that TPD, what was there? I told you I would teach you how to get it in tops and bottoms. But what was there? There was a micro cycle sequential SMT. So the NASDAQ created the failure swing. The S&P is the one that took, it was Q3, I believe it was. Q3's high had gotten ran on the S&P. On the NASDAQ, it made a failure swing in accordance to the microcycle. And how could you have gauged this information? If you go back and look at the previous slide, and have been following along with me, then you will see exactly why the S&P is the one that ran above this high, while the NASDAQ was the one that made a failure swing on this high. And this right here is the 10 o'clock opening price. So this would be the new opening price of the 15-minute candle, which would be candle 3. And if we look at the 5-minute structure within there, we have a true order block. And as soon as that 10 o'clock candle opens up, it opens up right at this same opening price right here. This is perfection. And there's narrative behind it. We have an SMT governing it. There's a TPD. We drop down one time frame, look at the lower time frame structure, price breaks down. If you missed that, that's fine. What do you have? You have the first model I ever taught you. This right here, non-farm payroll, would serve as your breaker. So if you drag that across, price retraces within that and then breaks down lower once more. So hopefully you found this one insightful. This weekend we will be going a lot more in depth into this, and I will be giving the real name for the concept and a lot more that goes with it. So hopefully you guys found this one insightful. I will speak with you all again Sunday night. Enjoy your weekend.